This is Wallet Brief, where we break down what actually moved the U.S. economy this week, without the noise. If prices, interest rates, jobs, housing, or taxes are quietly changing your money, this is where you stay informed. Let's get into what really happened this week, and what it means for your wallet. Gas prices had been rising slowly for 7 straight weeks, reaching 3.02 nationally by March 2nd as refineries prepared for seasonal summer fuel blends. That marked the longest streak of increases since 2023, but prices remained below the 3.10 level from a year ago. Crude oil was trading comfortably below $70 per barrel through late February. Grocery inflation had cooled dramatically from its 2022 peak of 11.4% down to just 2.1% annually by January 2026. But beneath those calm numbers, geopolitical risk was building as tensions escalated between the United States and Iran. On Tuesday, March 3rd, gas prices exploded. The national average jumped 11 cents overnight to 3.11 per gallon, according to AAA, the biggest single-day spike since March 4th, 2022. This marks the highest national average since October and the first time gas broke 3 per gallon since December. Some regions saw even sharper increases. Cincinnati jumped from 2.60 Monday morning to 3.19 by Tuesday, nearly 80 cents in just 24 hours. Diesel surged to 3.86 per gallon, the highest level since May 2024. The cause is simple: war with Iran. Following U.S. and Israeli military strikes over the weekend, crude oil spiked 8 per barrel, closing at 74.56 on Tuesday, up from around 66 just days earlier. Markets are pricing in geopolitical risk even without confirmed supply disruptions. The Strait of Hormuz, which handles over 20% of global crude flows, is effectively acting as a choke point. Oil analyst Tom Closa predicts the national average will reach 3.25 to 3.50 in the coming weeks, with even higher prices in the western U.S. On top of geopolitical risk, seasonal factors are accelerating the increase. Gas stations are preparing for the traditional annual switch from winter blend to more expensive summer fuel, and U.S. refineries are performing early maintenance. As a general rule, every dollar increase in a barrel of oil translates into a 2.5-cent increase in gas prices. The oil price spike will also lead to increases in diesel, jet fuel, heating oil, and natural gas prices, likely raising the cost of shipping, airline tickets, and home heat. Meanwhile, grocery inflation continues to cool. Food at-home prices rose just 2.1% annually in January 2026. The USDA predicts grocery prices will rise only 2.5% in 2026, well below the 20-year historical average of 2.6%. Egg prices are predicted to drop 22.2% this year as avian flu outbreaks subside. Dairy prices are expected to fall 0.9%. Fresh vegetables will increase just 1.4%. But not everything is getting cheaper. Beef and veal prices are still 15% higher than last year due to tight cattle supplies. Coffee and tea prices surged 11.8% year over year as extreme weather in growing regions limited supply. Sugar and candy prices are expected to rise 6.7% in 2026. Non-alcoholic beverages will increase 5.2%, driven partly by coffee. Restaurant meals remain stubbornly expensive, with prices up 4% annually. The trend is diverging costs driven by external shocks. Gas is exploding higher due to war, not fundamentals. U.S. gasoline inventories are in good shape, and American oil production is at record highs. Analysts don't expect apocalyptic moves unless the Iran conflict escalates dramatically or spreads to Saudi Arabia, Kuwait, or Qatar. For food, grocery inflation is genuinely cooling overall, but with huge variation by category. Eggs and dairy are deflating. Beef, coffee, and sweets are surging. The overall pattern is stabilization at the grocery store, but sudden volatility at the pump. If you drive regularly, you just paid 11 cents more per gallon overnight. That's an extra $3 to $4 per fill-up. If the national average hits 3.50 as predicted, you'll be paying close to what you paid in early 2024. Even 3.50 per gallon gasoline is not devastating to the economy compared to the record 5.02 average in June 2022. But it's a sharp reversal from the sub-$3 relief Americans enjoyed in January and February. At the grocery store, eggs are finally affordable again. Stock up now while they're cheap. Dairy, potatoes, and sugar should cost less through 2026. But if you eat a lot of beef, drink coffee, or buy candy and sweets, your grocery bill will keep climbing. Restaurant meals remain expensive, so cooking at home is still the best way to save. Watch the Iran war closely. President Trump said he initially projected 4 to 5 weeks, but hinted the conflict could go on longer. If Iran threatens to block the Strait of Hormuz or attacks oil infrastructure in Saudi Arabia or Kuwait, prices could surge past 4 per gallon. The Energy Information Administration releases weekly gasoline inventory data every Wednesday. For groceries, watch for any new tariff announcements from the Trump administration. Tariffs on imported food could reverse the cooling trend. The spring driving season starts soon, which typically pushes gas prices higher. Enjoy any relief while it lasts. This could be a volatile year. That's your wallet brief for this week. These changes don't always make headlines, but they do change how much you pay, save, and earn. We'll be back next week with the updates that matter. Until then, stay informed and protect your wallet.